Hello and welcome to Virtual Investor Conferences. My name is Phil Carlson, and on behalf of KCSA Strategic Communications, as well as our co-host OTC Markets Group, we're very pleased you have joined us for our next live presentation, a fireside chat with Nova Cannabis, moderated by Federico Gomes, Vice President, Institutional Research at ATB Capital Markets. Before I introduce our panelists, a few points to note. Please submit your questions in the questions box to the left of the slides. If you are interested in scheduling a meeting with Nova Cannabis, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Marcy Kiziak, Chief Executive Officer of Nova Cannabis Inc., which trades on the OTCQB venture market under the symbol NVACF and on the TSX under the symbol NOVC. Welcome back, Marcy and Federico.
Thank you, Phil. Hi, Marcy. How are you doing?
I'm well. How are you, Fred?
I'm good. Thank you. So let's start. Can you maybe provide a brief overview of Nova Cannabis and your key accomplishments over the past year?
Sure. Quick summary for you. Nova Cannabis really does have a simple mission. Our mission is to deliver compelling value to cannabis consumers. We have 91 current operating locations under the Value Buds banner. 64 of those are in Alberta, 26 are in Ontario, and we've got one currently still in Ontario. In terms of accomplishments in 2022, certainly was a volatile couple of years leading up to 2022 as well as in 2022. But we really did see some stabilization in terms of growth and margin for Nova. And really, as you've heard me say before, we really do continue to focus on consistent operational excellence and discipline, which has really set us up for long-term success. Otherwise, personally, I moved into the CEO role this year. In 2022, which was a personal milestone. And then also the majority interest in Nova changed from Alcanna to SNDL, who is a very well-capitalized strategic partner. So it's been a very exciting year for us, and we're looking forward to what 2023 brings.
Yeah, certainly very eventful. So you recently this year you recently announced a proposed arrangement with SNDL, which is still pending approval. Can you talk about that? Some of the details of that arrangement, and what would it bring to Nova and your strategy?
Yeah, I certainly can. It's a really exciting arrangement for us. We think it puts us in a position for long-term stability and continued growth. A couple of things it brings to us is access to a full suite of back-end arrangement for a full suite of shared services. So, we think legal, loss prevention, BT, those types of things, finance. So it gives us access to the back office, and it does that for us for 3 years without cost. And then after those 3 years, it is a discounted cost, which is an excellent arrangement for us. Also, it gives us access to 26 new locations. Majority of those are Spirit Leaf corporate-owned stores. And then there's also the Supret stores that will fall into that SNDL recently acquired. There's $15 million in debt that will be eliminated, and as well as access to significantly more to a revolving $25 million credit facility that will allow us to fund growth and continue to fund growth. And then a considerable amount of SNDL ownership returned to Nova, which does a couple of things, including allowing us to operate more nimbly in Ontario. From a flip perspective, what it does is it also enters us into a royalty arrangement with SNDL that again has works out really well for Nova. It puts us in a position to also have a couple of years where we've got lots of flexibility to grow without royalty payments. And so all in all, a really great deal that we think is going to transform the business and transform the industry.
Okay, and if the transaction goes through, as you mentioned, you would expand your portfolio of retail banners to include Spirit Leaf and Supret. So how should we think about the positioning of those banners relative to Value Buds, and is there any chance of cannibalization between the banners?
Yeah, so it's a great question. Cannabis retail is not that different from other retail on the whole. And what this allows us to do is allows us to access different parts of the market. Value Buds, we've always said, was not intended to be all things to all people. There is a specific Value Buds customer who is looking for value, looking for the transaction speed, looking for that assortment. But there's an entire other body of consumers out there and customers out there. So what this allows us to do is really strategically position ourselves amongst geographically, as well as where we think it makes the most sense in terms of, when we always talk about our real estate strategy, but allows us to really look at our entire portfolio of real estate and decide what is the right banner for any particular location or any particular geographic location. And so, and again, there is a customer for different kinds of service models. And so what this allows us to do is really access customers and make sure that we're delighting customers on the whole versus necessarily just the Value Buds customer. So not necessarily. I think where it's going to be really key for us is to make really smart decisions around real estate placement and then how we manage our core assortment and margin strategies amongst the banners.
Okay, so to that point, you mentioned your margin strategy across the banners. Can you talk a little bit about the differences in terms of sales per store and in terms of margins, for Spirit Leaf and Super Ready compared to Value Buds?
Sure. Yeah, I mean, generally, the Value Bud stores are generally, from a top line perspective, about double what the other stores are. But margins are, we see a better margin profile with the Super Ed and the Spirit Leaf stores. Again, it's a different customer, but it's also a different product. And understanding that in cannabis, it's difficult to differentiate between products because we all have access to the same products from the same place. But what we're able to do now is really clearly identify what the customer is shopping for that will go to those particular locations or lives in those areas. So we see margins are generally, we've talked about this a fair bit, but we see margins and the Value Bud stores, usually sitting around 20%, but better, certainly better in the Super Ed and the Spirit Leaf stores. But it's also a different assortment. We also see more accessories, soft goods, things of that nature that we wouldn't also see in the Value Bud stores. So quite a different experience, and so that's why the profiles are so different.
Okay. So when you look at the Canadian market right now, it remains very fragmented, many stores, and we continue to see consolidation occur, as mom and pops, smaller retail stores close doors or sell to larger competitors. In this context, how do you see the decision? How do you make the decision between buying stores or building new stores from scratch? How do you think about that from a capital allocation perspective?
Yeah, I mean, it continues to be a very fluid and dynamic conversation. There is an argument for both right now, particularly, in Alberta, where we're seeing a number of stores close. We're seeing leases come up now. We've been saying that for about the last, 8 months, that this is when leases are going to come up. Some folks tried to get through Christmas and then make different decisions. So we're seeing fully built out, fixtured, with appropriate vaults stores in Alberta come up at a pretty regular rate. So you do really have to look at those locations and see if they make sense. There's a lot of value in being able to pick up a license at a discounted rate, in a location that's built out. So looking at that, as well as looking at areas that continue to be underserved. There's not, certainly not as many underserved areas in Alberta as there is in Ontario, but we are continuing to hear momentum and noise around locations like Mississauga opening up, and areas of BC that previously have not permitted cannabis retail looking to open up as well. So looking there from a new build perspective, but otherwise it's starting to make more sense. It's really flipping. It's starting to make more sense to look at already licensed locations and picking up some of those licenses. So it continues to be a decision that we have to make incrementally. And it's like I said, it's really, really fluid.
Okay. And then I guess another theme in the sector, obviously we talked about consolidation, store saturation, but also another theme is just it's relative to your discount strategy. we've seen many of your competitors trying to emulate that strategy, moving into value, moving into discount. Do you think that discount will remain the main growth strategy in retail in Canada over next year, or do you think that you have space for other concepts to evolve and to occupy a larger place in the competitive landscape?
Yeah, so a bit of a loaded question. So first of all, in order to do discounter value and do it well, it does require a lot of time and attention on the back end of your business. You have to be absolutely laser focused on your execution to make sure that you're able to balance out your costs and your outputs. So it's not as easy to do as simply just decreasing prices or decreasing margins. It's not quite that simple. It's an entire machine. So I think we certainly will continue to see discounters in the market, but like I said, it's a challenging business to run, and you can't take your eye off the ball, and you have to remain focused, which I think has always been one of our competitive advantages, is that we rarely get distracted. In terms of room in the market and what will happen, absolutely, I think that there's room for other banners and other models. Like I said, there is a customer who's looking for a different service model. So while we can't necessarily differentiate on product, we can with core assortment, but like I said, everybody's got access largely to the same product. Well, we can't really differentiate there necessarily. Where we can differentiate is service model and trying to anticipate what customers need. What I think a lot of retailers in the space did in early days and a bit continue to do is try to anticipate or tell people how they're going to shop rather than anticipate and try to meet customers where they are. And that's what we're trying to do with all of our banners, and making sure that we're managing a back end really tightly, and then also making sure that there's a service model that is appropriate for different customers who are looking for a different experience. So yes, I think that there's room for different models. We just have to make sure that we're executing really well.
Okay, and then looking at the competitive dynamics across Canada. There are some provinces, some markets that are more mature than others. I think Alberta is probably a good example of that. But which province you think is more attractive right now from a competitive standpoint, where you have more opportunities? And then the flip side of that, which provinces you think are more competitive and will be the main battleground in 2023?
Yeah. So agreed. Alberta is the most mature of the provinces. Certainly, the most licenses still, most saturation, and also grew the license number the most quickly, and so definitely more mature here. I think the other provinces certainly could. Watch what happened in Alberta and what's happening in Alberta to anticipate what will be quite similar there. I think the battleground will continue to be Ontario, quite frankly. I think that's where we'll continue to see the most growth and the most progress. In terms of the other provinces, I think each of the other provinces all have benefit and value, but I also think that there's limitations for a lot of them. So if you think about, social responsibility funds, or you think about caps and that type of thing, I think we have to start, what we really have to start doing as an industry is looking at cannabis as regular retail and remove some of those things that are continuing to keep this industry stigmatized. And as we start to remove those, then I think that we can see many more opportunities in other provinces where we can operate much more like traditional retail. So I think there's benefit. I think there's opportunity throughout the entire country, but I think there's work to do from a regulatory perspective.
Okay, and then I think a portion of your strategy also revolves around private label. So could you comment on that? Which products you currently have, and how do you plan to expand that over next year?
You bet. So with our private label, we've been very careful to make sure that product and what we're selling and what we're putting our name on is really carefully curated and carefully managed. It's important for us because the Value Buds customer is not, I say this a lot, but I'm going to say it again, the Value Buds customer is not looking for cheap cannabis, they're looking for value for their dollar. And so we take that very, very seriously. And so it's important to us that the offerings make sense. And so we've taken our time a little bit to make sure that we've got that nailed down. So today we've got 2 different strains in the market at 2 different sizes, so 4 offerings all in. We've done a couple of things, again, making sure that the quality makes sense, making sure that we're offering them in a pack size that makes sense and that's really attractive to our customer, and that we can manage the consistency of it. Moving forward, what we'll see come into the market, I think we'll see a vape come into the market this year, as well as pre-rolls, both of which I think, again, target the Value Buds customer. We're thinking about a few other things that will make sense, but again, they need to make sense. And we're still operating in a regulatory environment that creates some challenges around things like edibles and potency around that type of thing. So before we get that far down the line, we need to make sure that we can address some of those things. So you'll see very likely a vape and pre-rolls enter the market reasonably soon. And
talking about some of those categories, in terms of a product mix and assortment, which categories you believe will be the most attractive for you this year? Where do you see growth, and where do you see margin as well?
Yeah. So infused pre-roll, without a doubt, is where we think we're going to see the most movement this year and the most energy. Infused pre-rolls the customers have really gravitated towards them. There's for a lot of reasons. I mean, there's potency reasons, there's price reasons, there's flavor reasons that people have gravitated towards them, and the LPs, they have a lot of control over that product and the consistency of it. So without a doubt, I think that we're going to see infused pre-rolls be the product to watch this year. The other one I think that I personally am excited about and I'm going to see, looking forward to see what happens, is beverages. So, we saw previously you were limited to what you can buy in terms of beverages because of the gram equivalency issue. And so, you could buy 4, maybe 5, then you couldn't purchase anything else and you couldn't purchase any more beverages. So for a lot of folks, it really limited their ability to want to buy them or try them, because it limited their ability to try other things, right? And so now that those gram equivalency rules have been fixed, corrected, now people can buy them and use them if they choose to replace liquor, or they choose to use them as what they take to an event or what they serve at an event, or that type of thing. So there's much more flexibility around beverages, and the selection of beverages, in my opinion, are excellent. I think that they're worth trying. So excited about that. I'd also say large format or large pack size pre-rolls, especially there's the smaller straight edge ones. We're seeing a lot of energy as well. People are purchasing those in large quantities. The 0.3s, because they're very accessible, and they create a lot of flexibility for people. So that's where I really think we're going to see a lot of movement this year.
Okay, and you mentioned regulations. So we've seen the changes in beverages, and I think we've seen some other small regulatory changes recently. So do you think that we're making positive progress on that front? And do you foresee any major regulatory change that could benefit retailers and Nova Cannabis in the near term?
Yeah, I mean, absolutely. I'll talk mostly about the 2 provinces in which we largely operate. We saw the window coverings, the regulation, or at least the so window coverings changed this year, and so that makes a pretty big difference for us. And so what that does is it allows our staff to feel safe, and it also, again, takes us back to an area where we are treated much more like regular retail versus something that is that should be hidden or should be hidden behind a dark window. So that really has made a big difference for us. And again, largely it has really helped the perception of safety for our staff. So really excited about that in Alberta. In Ontario, that has not been lifted, but we would really like to see that be lifted as well. I think Alberta has absolutely demonstrated a case for it, and why it should be done there as well. Also IDing at the door, that type of thing in Ontario is, it creates a divide between cannabis retail and any other kind of retail, which is problematic. And then in terms of other things we'd like to see in the beverages was a big one for us. That's a big win. And then ultimately, I think we still need to continue to look at the restrictions and limitations on the amount of cannabis that can be purchased. And you don't see that in other industries, and you don't see that. I mean, you don't see that in liquor. You don't see it necessarily, don't see it in tobacco. So it still doesn't make a lot of sense that we're seeing it in cannabis, because we've been at this for 5 years, and we have no evidence to show that cannabis should be treated any differently. So I think that continues to need to be monitored. I also think that's what we need to do in order to continue to move people from the illicit market into the legal market. I think we're getting there with that, but I think that would also make a significant difference.
Yeah, no, I think we're all waiting for some of those regulations to change. When you look outside of Canada, internationally, do you see any opportunities? Right now, you're only in Canada, but do you see any opportunities to invest? Maybe in the U.S. or Europe?
Yeah, I mean, I'd say that from a U.S. perspective, we're looking at it more now and keeping a close eye on what's happening more now than ever before. I still think that we want to make sure we master and win Canada first. I think that there's a lot of lived experiences and stuff that we're seeing in Canada that can easily translate or serve as lessons learned to the U.S. So I think that we will take a lot of experience there when we do, or as we look at it. So I'd say now we're looking more than ever. Plan is still to master and win Canada.
Okay. So I think that a big theme in the industry, given the challenges and the macro environment, has been companies trying to reach to profitability, and especially reaching free cash flow positive. Mm-hmm. So how do you view that dynamic playing out this year? Do you think that Nova has a clear line of sight to becoming free cash flow positive?
Yeah, I mean, up until recently, the goal really was market share and mastering our business, and we talked about battlegrounds earlier, and it really was that. I think the business has now evolved in a way that we now have sustainability around the business. I also think that as we see this transaction close, shortly, a little later on this year, as we see the Nova restructure close, that also sets us up really, really well really sets us up well for success and for stability, and for us to continue to walk that path. So yes, absolutely. And the relationship with SNDL and that strategic partnership, it really is going to be a critical, pivotal point for us.
Okay. And then looking further this year, I mentioned the macro challenges. I think that there's talks about a potential recession. So how do you think that could impact your strategy this year? How do you think that could impact consumers? And how do you think you're gonna perform?
Yeah, I mean, the benefit of us having such a long-standing relationship with liquor and the liquor business that we've previously and are attached to, is that we've had the benefit of seeing how that has how recessions have played out in the liquor industry. Don't anticipate that it will be entirely different in the cannabis industry. People tend to trade down a little bit in that case, but I still think that because we have a value strategy, and because we've been really careful about maintaining that value customer and managing value for the customer, I don't anticipate that Value Buds is going to be negatively impacted by it. I think if anything, we'll be positively impacted by it. And then it will be, then we really have to look at our other banners and decide how we manage those, how we make sure that we're continuing to focus on the customer who still wants to shop there despite any recessionary pressures. So I think that, but I think that Value Buds will not be negatively impacted by a recession at all.
Okay, and then to conclude, what do you think are the key catalysts and goals for Nova this year?
Yeah, I mean, there's a number. We've always been a really, really customer-focused business. You've heard me say it, I'm sure, a half dozen times in the last 24 minutes. So we will continue to make sure that we are really focusing on staying focused on providing the customers what they're looking for, because in this business, because of the competition, because of the pressures, because of the saturation, we need to make sure that the customers stay in the forefront of our sights. And so really for us, it's going to be about making sure that we're continuing to focus on them and providing a really consistent customer experience. At the same time, improving margins, driving process efficiencies and process improvements, and looking where we can continue to benefit from the scale of the business as it grows. And so for us, I think that's really going to be where we focus. And then it is for us to really continue to look at growth in a sustainable and strategic way that makes sense for us and our shareholders.
Perfect. And that's the end of our session. Thank you, everyone, for watching. Thank you, Marcy. Have a good rest of the day.
Perfect. Thank you, Fred. Thanks, everybody.